saying, well, we could have a pullback. We too frothy?
Great question. I began my career working with William O'Neill out in Investors Business Daily, and the very first technical analysis joke that I learned was, if you don't like the way the chart looks, turn it upside down. And I think Tom's doing a great job supporting his technical strategist. I've just been of the belief that we can't be too cute, and I think it's preposterous to try to make 2-week calls. I think the holding period of stock analysis is what you need to look at. With respect to Mr. Ackman, he's been underperforming for several years, and he's got his own agenda. With respect to the SPAC crew, they've been underperforming. And I think this notion of trying to make the big market call, I think it's dangerous. We just published our 24th forecast on the S&P 500 and our 10th consecutive forecast on the S&P 500 and the TSX at BMO. And I say that with much humility. Because when you take a look at the perspective that it takes to put these reports together, and listening to my awesome team that helps me put together a 58-page report, we do a tremendous amount of work. And my career spans a lot of perspective. And I fear that a lot of people are just talking their book and feeding more to the rhetoric and fear. And if you take 2 steps back, Scott, and you take a look at the environment with respect to low interest rates on a historical basis, double-digit earnings growth, 20 or 21 times earnings with respect to PEs, you want to own stocks, period. Our theme for 2022 is prepare for the second derivative. So you can't call me Pollyanna all the time. I think the return structure of stocks are going to be less than they were last year, and I think that makes sense. But remember, we raised our target twice in 2021. And I rarely do that. And the conviction that we have with respect to the fundamental aspects of stocks, especially in the U.S., and oh, by the way, Kevin, Canada's coming along for the ride as well, my Canadian brother O'Leary. But I think North America is going to continue to lead because of the strong trends of growth at a reasonable price, dividend growth, and high quality. I think that's going to continue to lead the way.
So just to clean up something, just so we're not taking pot shots at people, I mean, Ackman's been outperforming the last few years after a period of underperformance. I just want to throw that out there. And he raises a point that others have raised too, which just adds to the conversation of the time as to whether we are, in fact, in a classic bubble inflated by, Brian, the Fed. I mean, the Fed's inflated the thing, right? They've been pumping it up with really no abatement at all. And eventually there is going to be some sort of pullback, whether it's taper or they're forced to raise rates before we originally thought. Don't you think that's going to have an impact?
Well, take another look at some of those performance numbers, number one. Number two, in terms of the market in general, in terms of being a bubble, 90% of the stocks in the S&P 500 in 2021 incurred a correction more than 10%. In all 11 sectors were down at one point more than 8%. I think too many people make index calls versus stock calls. The market is a market of stocks, and clearly names like Tesla or areas like Bitcoin or the meme stocks or Rivian, those are bubbles. Those are names that we don't invest in our 9 portfolios and our $7 billion that we invest for clients. Those aren't names that we're gonna chase. I love those names, by the way, because with so much focus on that, I think people kind of forget how great the overall stock market is. So we like those types of stories out there to scare everybody, to kind of bring back people to bare bones fundamental investing, which what we do.
But you don't think that next year is going to be as good, if not, maybe not anywhere near this? With all of that said, you don't.
No, I mean, listen, I'm a common sense kid from Wilmer, Minnesota. I've been doing this for a long time, and there is a precedent. Oh yeah, I've been doing this for a long time, and 4 consecutive years of double-digit performance in the S&P is not unprecedented. I'm positioned to underpromise and overdeliver. I think Tom Lee's right. My good friend Tom Lee is right. I think we're going to probably take out 4,800 by year end, because we're going to have a buying exhaustion to the upside with all these bears out there trying to scare everybody. But next year, I think, is going to still be a positive year. And I think the volatility around the world, quite frankly, is going to drive assets back to the U.S. and Canada. And I think that's what gets us to 5,300 on the S&P and $245 earnings, and 24,000 on the TSX and $1,500 of earnings here.
We may learn by the end of the weekend who the next Fed chair is going to be. If it's going to be Jay Powell, it's going to continue, or it's going to be Brainerd. Does it matter?
I don't think it matters, Scott, and thanks for bringing that up. I think, again, let's take 2 steps back. Ms. Yellen and Mr. Powell worked together for a while, and the seamless handoff was great. And remember, Ms. Yellen is the Treasury Secretary, and Mr. Powell changed the really format in conjecture on the Fed in August of 2020 when they changed the mandate from inflation to employment. And what do you hear Ms. Yellen talk about the majority of time, aside from the inflation fears, which are clearly just on a short-term basis? Employment, employment, employment. So they're on the same page. I would find it very surprising, quite frankly, and it's just my personal opinion, that Powell gets kicked out. I think he'll continue, and I think that just brings a additional stability with respect to what's going on with the Fed. Oh, by the way, that's still pumping in money. Additional.
All right, I got you there. You have a good Thanksgiving in Wilmer or wherever else you celebrate it this year.